Hello and welcome to the Relevate podcast, where we talk about all things sales, marketing, and technology. Today, I have the honor of being in a podcast interview with Paul Huggins. How are you going today, Paul?
Yeah, very well, thank you. Good to be here.
Fantastic. So if you're listening, if you're watching, Paul is an absolute legend in the investing world. I think last time I looked at it, you're roughly handling about $13 billion under management, around about that. That's what the Forbes magazine said.
Yeah, it's a little bit higher than that now because Forbes didn't include the fixed interest component and also the debt book. So it's just a bit over 23, would you believe? That 13 was more of the direct equity investments. So overall, it's about 23.2 billion.
Fantastic. Yeah, and as a Australian billionaire and investor and card collector, I think it's really good to have someone of your stature, like as an Australian. Quite often, you read it, magazines. You've got Elon, you've got Trump, you've got Rockefeller, but then to have an Australian really kicking it and to do that on a global basis as well is fantastic. So I guess, like our audience are probably listening to figure out how, they themselves can get on your trajectory or to get to a position where they've been able to grow. Now, you've written a book, Intelligent Leverage, which I've got right here. And we'll also link in the show notes as well. Thank you for signing it, by the way.
No problem. No problem.
So you've sort of come from sort of humble beginnings in terms of the work that you put in. Sometimes people look up to a billionaire or a multimillionaire and say they must have got a leg up or a hand up or something. But that's not necessarily the case. So I guess, would you tell us about hard work and how that's paid off for you?
Well, I mean, you're talking about family and sort of the upbringing. I come from very hardworking people, from family, hardworking people in my family, and both sides. So my father's side, we're very entrepreneurial. Mother's side, we're very academic orientated. And so my great grandfather, my father's side, was very entrepreneurial in land subdivision. And my grandfather, my dad's father, was very also very entrepreneurial in land subdivision in Melbourne and Queensland, believe it or not, and started owning a lot of land down in Williamstown, Port Melbourne, and then went to Queensland and did a lot of the high-rise apartment buildings. Dad was a structural engineer at Lendlease, and Mum's side, we all come from. Her great grandfather was a Supreme Court judge, Chief Justice. And her father was more the mechanical engineer side of things. So, the hard work that was sort of knocked into me at a very young age. I mean, I always had money at a very young age, and I was always. I remember even the age of 4 and 5 or 6. I always had a few $100s in my wallet, which is like quite unusual. I understand. I was fascinated with what I could do. And so, but I really related to hard work in exchange for what you could have and what you miss out on if you don't work. So it was never a case of taking something that you weren't entitled to. There was always this exchange of energy that had to be, the laws of sowing and reaping. So work was knocked into me at a very young age, and getting up early. Getting up early was always one thing that since I can recall. Even when I was a kid, 5 o'clock was about the time I'd get up in the morning, always an early riser. And really, so hard work was ingrained. It didn't sort of follow through with my family. My brother and sister, bless them, who one's international now and one lives in Melbourne, didn't sort of have that same drive. So what I'm getting at, if this hard work, you have to, real wealth comes from decades of hard work. I see so much rubbish on Instagram and kids driving around in Lamborghinis and God knows whatever. A lot of that's we know it's just all fake. And a lot of it is all, and it takes decades of hard work. And so I've always, have known that. I've never known anyone to be really successful without elements of hard work. And that's not to say that, that as you get older and wiser, you'll be able to work a lot smarter and harder. But it's something that's always been and always been driven, and I remember, and I'll say this too, that in the areas of hard work, the younger generation that probably don't want to hear it as much because they think there's so much instant gratification, and they have patience. A lot of them don't understand the word patience. And I'm just generalising to the younger people, and it's not their fault. They probably don't realise it. But I've found that for me, that if you haven't got that genetically, I think that success and drive and motivation, I don't think you can coach motivation. You either have it or you don't. You have to drive it yourself. You can go and sit with 4 weeks with Tony Robbins. At the end of the day, 48 hours later, you're going to revert back to that same person mirror. But I found that for me, 60% of my drive was in my DNA. And another 25% was in my environment that I grew up in. And the balance of that was the experience I learned through education. So I'm a big believer that this drive, because a lot of these experiments have been done in research, what motivates one guy with a level of IQ that's high and a C grade guy that actually goes off and outperforms 20, 30, 40, 100 times better than the A grade student? Well, why is that? And it turns out that the scientific evidence that I've studied over the years is a lot of that's in your DNA from birth. A large portion of that drive. Now, some people have it at birth and won't turn it on and never be motivated, but it's in the original deal, in the wiring. And
no, I was just going to say, it seems like, you've seemed very directed on a particular pathway. Like you mentioned, not only has it been hard work, but you've also gone down the path of doing your accounting degree, your legal tax law. Yep. And so you've gone so deep in being what is now, you could be an investor with your eyes closed, and not that you would do that, but like the work that you've done, not only from a experiential perspective, is you've gone out and done the academic. A lot of people now are saying you don't need the degree, you don't need the study, but in your field of work, there is certain requirements, for like ASIC and all that sort of stuff. But I think that, being very targeted is very, very deep and very powerful skill. So how has that specifically helped you?
It's what my view is on actually the current views of the younger generation saying you don't need to take that path. Is that where you're going?
Yeah. So experiential versus academic versus, I guess, a combination of both.
Well, I think that that there are, depending on what area that you're in. I mean, I know some people that have done extremely well in certain sectors. I mean, when you start law and economics, which I studied, and accountancy, is that gives you a very broad understanding of how, the business world is it's an intellectual sport. Business is chess, not checkers.
Yeah.
It's an intellectual sport and it's chess. So getting an understanding of the legal system and macroeconomics is an extremely good start. At the same time, I would say to people that the use of the English language is just as important. The ability to be able to communicate. Now, it turns out that it's critical that someone has a good understanding of economics and law. That doesn't necessarily, if they're going to go and build ships or they're going to go and do, getting into construction, they don't necessarily need to have a law degree or economics. I just found it, I wanted to know because I was curious about how the world works. So I think it does make sense. Yeah, that was important to me. So, but that's not to say that someone can't be successful without a degree. It's not to say that at all. But I found for me in my world, I had to know and get a good foundation and know more than the rest. I couldn't have done the things I've done without that education. But I'll say this: be very careful of the education, the path you take. I know a lot of people that are taking paths that they haven't really thought about the best path for them. Yeah. What's their best skill? What's their talent? And they wake up one day and say, you know what, I really should have been X, Y, Z, but it's too late now, and they're 68. You know, so I've spent a very long time thinking about what I'm going to be good at and what I'm not. What I have learned that over time, and whether you're an academic or you want to go out there and own that Lamborghini at 30 and make a lot of money, right?
Yeah.
Is that I can tell you now, whether you go and get a degree or you don't, overarching everything is the ability to be able to communicate, the ability to be able to have a state your claim and be clear what you stand for, the ability to be able to sell your idea well to a board, to people, and overarching the words of integrity and honesty. They just go, that's a given. But no matter how good you are like that, I've seen some guys that I've met before, and men and women, that haven't had degrees but have been excellent in their field, and they do own jets.
Yeah, right.
And
well,
so,
that's a good measure.
So there's a mix.
Yeah.
And, you know, and a perfect scenario is, but I know some people that are now that I went to Melbourne with did law, and they're actuaries, and they've gone on now, and they're professors, and they're good friends of mine, but they've got a Camry and they'll always drive a Camry. Nothing wrong with the best with a Camry.
Yeah.
But their aspirations were different.
Yes.
They get so much joy out of teaching. So this is the other thing. I never forget the most damning thing that was said to me by my own mother was many years ago about I get frustrated with people because they just don't push themselves. And I was talking about a particular party, and she looked at me straight and said, not everyone wants to be like you, Paul.
Yeah.
So leave it alone. So you have to want it. So I guess today we're talking about people that want to strive and break through that barrier and find a pathway.
Yeah.
I think that's what we're talking about today. But
absolutely.
Yeah. And I think a lot of people is that the best advice I can give at this point in time is to really think about some of the key attributes, some of your strengths, and dream. You know, what are your dreams, and are your ideas any good?
Yeah.
And I can tell you now, I still write notes on my pad all the time, and right until the minute I go to bed on ideas. And I'm proud to say that, you know, 90% of the time of the ideas of new ideas, innovation, don't work, and I'm going to shred them, but 10 of them actually worthwhile considering and investing into. So you're constantly always thinking, you know, but it's not going to jump up and bite you. It'll come to you, but you got to push it.
Got to work for it. Yeah. I have a concept of what you were talking about, people being communicating and people that really sort of go after it. I have a concept. A lot of people say they'll go after it, but I tend to, for lack of a better term, look at people's feet, see what they're actually doing, and see where the output is coming from. Now, in saying that, you know, you have a comment that I've read on your website, and I've heard you say, is that nobody is self-made. So could you elaborate a little bit more on what you mean by that?
Well, what I mean is that the best form of resources you can have, and the biggest resource I have, or the biggest asset, the most valuable asset I have now, in my mobile phone, I think there's about 6,400 people there. When I started in business, as far as clients, I had about 12, and family and friends. When I had my new Nokia phone in 1987, I was the only guy around with a mobile phone in 1980. I remember it well because the stock market crash hit. I was 20, and I had a $4,500 Telstra phone in my car, and it was one of those big bricks. And so I remember why that's relevant is that now I realise if I want to if I get a problem and I think about how do I hedge that currency against that, trade those bonds. I've got a client that wants to move this money from Hong Kong to Singapore or to the US, and there's tax concessions there. We need to get a ruling on that. I'll call up the smartest lawyer I can find in Hong Kong, and I have this direct line. What I'm getting at is the most valuable asset you'll have in business is your contacts and associates and your networks. And to build that up takes, you can't build a network. And I'm not talking about, if I step aside and I use Ed Craven and those guys as an example that have become billionaires through online gaming and IT as such. That's a different business. Not many crack that field. I'm just talking about, let's bring it back down to reality, not the one in 20 million.
Yes.
You need to really think about, and that's why with school education groups, discussion groups, business groups, not mates at a bar on a Friday night.
Right. Yeah.
Not a rave party. I'm talking about real business people that you can grow with. And at school, I had a lot of my friends that went on to do great things. I mean, I had great grades. I mean, I got the highest score when I was in year 12, 406. Actually, I actually ended up coming second in year 12, believe it or not. But the fellow that beat me that year is no longer with us. So, but in that, he passed away. But so I had great grades, but I think that I picked up a lot of contacts through my network, and my family helped as well. So I made sure that I was always interested in really successful people, accountants and lawyers, and learn as much as I possibly could. So the network is absolutely critical. To build a business, and I've always said raising money is the easiest thing, and money follows management. But no one's self-made. I've found that without people, I'd be 5% of what I've achieved.
Yeah, right. That's a very big difference.
Yeah, but it's true, and it's because they become a tool. They become an amazing instrument in my life, instrumental.
Yes.
And a great source, but at the same time, I've helped them.
Yes.
But that's no different for me saying I would be no further advanced if banks didn't exist.
Yes.
Where would people be today? Forget about networks. Where would people be today? The average punter out there at 45 years of age with 2 kids and a wife, where would they be if they couldn't borrow money?
At a cave.
Yeah, a caravan or something like that. But where would they be without the ability for a Visa card or a credit card?
Yes.
So I bring it up because that's a great analogy. These are just tools to help other people. I don't know anyone's self-made. Who is self-made without the use of other people? I can't think of. I read, 2 reams a day. I can't name anyone, and I'm talking about not someone that's productive, not someone who's in the drug trade. I had a presentation one day. What about someone in the drug trade? And I said, I'm talking about someone productive, not destructive.
Yes. Yes.
Who is self-made?
I can't answer. I think it's more of a perspective. Like you talking to you brings a lot of perspective. I've heard other billionaires speak, and they've talked about money is not money. Like money is a tool. It's a thing that gets you something else. It's a social score or something like that. And I think that mind frame or that mindset shift is what we really need to get to. And so self-made is selfish. Being when in realistic terms that they probably have gotten to where they are because of other people, but they're just not recognizing. And that's probably also why they're not as far as you are, because they're not recognizing the people around them.
Yeah, I do recognize them. I mean, when I look at someone, and I'm well aware of the Gina Rinehart, for example, and I met her at the CR Award. And when you look at that, I mean, that was a big lead up, and that 72% of the billionaires today have actually had it handed down or passed to them.
Yes. Yeah.
When I started, when I was 16, I had $6,912 in a Bank of Melbourne passbook savings account. I've still got that. I just under $7,000.
Yeah. But you did that through Bob a Job and cleaning cars and pumping fuel. And
what I used to do is to play tricks on myself. And the book had become redundant. Everything went through online. I used to write zeros in the passbook. I used to add a couple of zeros and then just write it in with a black pen and just sort of look at it and wonder what that looks like. 6.9 million or 69 million. Yeah. And just play with it and stuff like that. And, never show anyone, of course, because they would have thought you're but is to sort of play with it. So, but I think, but the key is, I mean, you know, no one is self-made, and the one thing that stands, I'm trying to give as much as I can in the time we've got, is that most people are taught, you've got to have the ability and have the understanding, the people that sell and distribute the most have the most success. I said to someone the other day, sell something. Turns out that anyone selling things on a large scale becomes wealthy. Don't just sit there. You're not going to get wealthy working on a time sheet on an hourly rate.
No.
Sell something.
Yeah. It's interesting what you said about the mindset piece there, like adding the zeros on. You know, you listen to Jim Carrey used to go in with a $10 million check to the bank every day and then go, oh no, sorry, take it back, and then walk away. He was rehearsing for when that was a reality. And I think it was Ace Ventura. It was the first movie that he got, and he put it in, and it was the actual $10 million. That's what he said. I'm not doing it unless I get $10 million. And he got his check.
Yeah, for services rendered.
Right. Yeah. Yes.
That's what he said. Services rendered. I got to meet him, and he said, but he said that in the interview. Yeah.
It's a mental rehearsal is a powerful thing. I think that's fantastic. So where do you see, like, a lot of budding investors? Obviously, there's the work component that gets you the revenue, but then to really leverage that intelligent leverage, let's say, is investing. So where do some people get wrong? Is it like throwing it all down on crypto, thinking that can go to the casino, win big? What's your experience?
Well, I mean, you know, most of my early days was looking after people that were twice my age, 3 times my age. I figured out at a very young age, if I was going to get into the area of investment banking, particularly advice and funds management, there's no point talking to people my age because they didn't have any money. Yeah. And so at 25, I mean, I started to really focus on clients that were 60 and 65. A lot of my colleagues would say, why are you dealing with those people for? And I used to find it so fascinating because they'd had 50 years, 40 years of experience over me of life. And I found it so interesting, but it means also I had to keep up with their thinking as well. So that's why I traveled a lot. I could talk about political issues and issues that they were reading about in the Australian The Age. My colleagues were reading the Herald Sun. Not to criticise the Herald Sun, but I mean,
criticise away. It's toilet paper. Yeah,
it's substance in there. Unless you like football. So, the biggest problem that I feel in that the institutions and the government have brainwashed society for 70, 80, almost 100 years. And when I say that is, I look at things now when funds out there, industry funds, call it super fund, any fund out there, earning between 9 and 12% for a balanced portfolio over the last 12 months. And I look at that now, and you're talking to a guy that as a property lawyer, taxation, accounting, funds management, analyzes, and I've borrowed and paid back a bit in debt. I understand risk. And a lot of people have just assumed behind this veil, a bit like the Wizard of Oz, when they pull back the curtain, they find out the Wizard of Oz, that the markets and these institutions have done a great marketing job. There's a great book called Logo, which you must read. It's a decent book. It's 20 years old. And that tells a great story about where people get it wrong, that no one spends enough time on the risk. To give you some idea, when I got in the industry, these so-called balance funds had 50% share market exposure. The same sort of CAG balance funds have 82% market risk exposure, with the stock market at all-time highs. So the problem with that is now that what people are buying is the intrinsic value is probably 30% over price. You don't understand the risk. I can't wait for the stock market crash. I can't wait if the bubble crashes in commercial real estate, which it partly has, commercial, because I'm not exposed. So, and when you, so I think the biggest problem today is that where they get it wrong is they overpay, and they don't understand that the real risks. I don't know how many, and I'm talking about every investment outside of term deposit has elements of risk.
Yes.
Like well, Bitcoin, and I'm not against Bitcoin. I'm not against digital currency, and will be what we saw with credit cards 70 years ago. There'll be different forms of digital currency that will be available, Bitcoin and others. But the problem you've got with it is that here's the thing: when someone says to me at a party or a function, "What about Bitcoin?" and he's half my age, Bitcoin's the only way to go. So I'll tell you what I'll do. Let's say I give you $1 million, and someone gives me $1 million. I'll race you over the next 12 months, 3 years, 5 years, and 10 years. And whatever, if you beat me, you can keep the money. Yeah. I won't invest into Bitcoin, and I won't invest into digital currency, what I know and what you think you know with Bitcoin. Because, and you can borrow all you like, banks won't lend you any money. It turns out on the million, banks will lend me 9 million on property.
Yeah.
So I've got 10 million.
Yeah.
Earning 2%, 3% growth plus a tenant. He's got 1 million, and right now, since that comment in the market, got whacked 20%. And there's no income, and you're speculating, and it's not regulated.
Yeah.
So I'm not against it, but you are speculating no different to black diamonds.
I'm not pro crypto at all, but I think that's the topical thing, and by at least covering it and getting your expert opinion, it may as well go and put it all on black at the casino and guess what happens.
There's nothing wrong. Look, unless it gets hacked, or they open up and distribute more than the 20. Well, there's 20% of those coins that have gone that no longer exists. But I'm just saying it's very hard as an instrument. For me, in my world, it's too slow. And people look at me and go, "What do you mean it's too slow?" I go, I can't safely leverage it, and I can't insure. Lloyd's of London, I can't insure the volatility.
This just makes me think of the tortoise and the hare. The tortoise wins the race. Yeah.
And I'm not saying, and could we sit here in 2 years' time and Bitcoin's trading at 200,000? Possibly. I don't see it. And even if I'm wrong, everyone you speak to about Bitcoin, I say to them, but how much, if you think it's going to go to 200,000, how much money would you, it only put down 10,000 or 20,000. I said, well, if you're that motivated, why don't you put your house on it? I'm not that motivated. I go, well, you don't believe it. Yeah. And you don't believe it because it's going to hurt it. So that's
so it's a faith coin, not an actual currency. Yeah.
Yeah. And so getting back to your question is it really comes back down to the lack of education, but people do not understand elements of risk they're bearing at any one time on an instrument.
No. Well, moving along to you're also doing a lot in the US, to my understanding, and I think like at the moment there's just such a wild political environment, and people seem to be a little bit unsure. So I guess in the first instance, retrospectively, just to give a bit of context, how has expanding to the US helped you, and would you recommend anybody do it now?
Well, when I went over to the US, this is going back 30 plus years ago, we started out of all places, believe it or not, in Las Vegas. And not that we were gamblers or like strip shows, it wasn't about that at all. It was a very wealthy friend of my father's had the patent for the ATM machine, global, very wealthy individual, passed away, and teamed up, and this is going back 30. This I was effectively early 20s, and partner with my father, and I ended up going along for the ride and going in to buy 250 to 300 apartment room buildings and then strataing and selling off to the croupiers, like strataing these buildings. It's very successful. First one, second one, and then I ended up. Then everyone started getting involved in that particular asset class. So we went down south to Texas and Austin, and did a lot of subdivisional work and bought up a lot of land in Austin. Now, so that was very successful. I still own 1,300 acres over there. So that's been very successful in land. But aside from that, someone going in and putting their toe in the water in the United States, it's probably just not limited to the United States. Would be certainly in the top 5, up there with Spain and Vietnam, and the US. And the reason for that in the US is because the tax system is written in favour of real estate, like it is here. But you're getting it's a much more deeper market, and there's a lot more. Land's cheaper, building prices are cheaper. The rents on a house, on a $500,000 house here, the rents are almost double in the US.
Yeah, right.
So I think of course, going over to the US now, you're moving against the currency, which is obviously a lot more challenging than what it was 5 years ago. But I'd say the buying opportunities for the US in right areas are far superior than Eastern Seaboard, or certainly Melbourne, Sydney.
Oh, blows my mind how you can get a house for like $200,000 in Texas, and it's like this, 6-7 bedroom mansion.
Yeah. I'm happy, absolutely. I mean, so I've bought a lot of those and existed. Bought a lot. I didn't just do land subdivisions. I bought a few. I actually one stage had about 70 homes over there, which I sold off, and 50 of them I sold on vendors finance. So the people didn't have the money. They had 10%, but they didn't have they couldn't get money from the bank, And so we would lend them money on a 3-year loan and then move them on their way. And they'd have a home rather than paying rent. It was 10% cheaper for us to go and finance them, and they'd get into a home. But the opportunities in America now, not only, for myself, I'm very focused on America now. I think where the areas in real estate and IT and innovation, the one driver to the United States, for investors is the ability to be able to raise capital. And there's a lot more capital on the sidelines. I mean, raising $1 billion is relatively easy in the United States. Raising $1 billion here, unless your idea is outstanding, is 10 times more difficult.
Yes.
So there's just a lot, and when you start getting into property, land, even classic cars, for example, some of the biggest transactions I've done have been in the United States on cars that people have bought sight unseen, multi-million-dollar cars.
Yeah, right.
And as long as the documentation is like perfect, and they pay, but they're a can-do nation.
Yeah.
So, I mean, if it hadn't been for my son and other family commitments, I would have lived there many. I've got family friends that've been there for 30 years. They'll never come back.
Yeah, right.
And I'm at a stage now where my son now is grown up, but I think it's likely later this year that I could probably be in the United States for probably 6 months of the year.
Yeah, right.
Because of the opportunities and so forth, and that I can't see the regulatory requirements changing for real estate development, land tax, all the issues that you just don't have that in America.
Yes. Yeah.
Big opportunities. If you're starting off, again, the currency, you've got to have a network. You've got to know, who to deal with, what the hell you want to buy. Takes time.
So I guess this next question is not meant to be divisive. Obviously, there's a lot of politics, and I don't really want to go down the political route with this. But I guess, what's your view of the Trump presidency and specifically its impact on Australian investors and business?
Well, we're experiencing that now, aren't we? I mean, before
tariffs,
it was I call it the champagne and cocaine mode, or cocaine champagne phase, and I came up with that phase when I was in uni, because effectively that's what was going on.
Yeah.
And now that euphoria has now come to an end, now it's become serious.
Mm.
So the big question now is what does that do to currency?
Mm.
What does that do to the cost of living, inflation, and the takeoff? Let's say, for example, like steel, right, or any commodity. It's not so much what the cost of the steel is tariffed at 25%. It's the knock-on effect for the usage of that steel, second, third, fourth, through the distribution chains. It's a knock-on effect.
Yeah.
And so raising interest rates has been a very, very blunt instrument for the US and the Australian government, not realising the knock-on effect. And the knock-on effect's been horrific for the middle class. But the tariffs, until things settle down, this year, the economists trying to work out. I mean, I've spoken to 30 economists that I rate, at world level, world class. And, it's, who knows where this is going to end. Even if Ukraine settles down, if that settles down, that's one thing. But what happens to just when we're coming out of a inflationary, if things are starting to settle? What I suspect is the tariff, if it's not well managed, will probably trigger a recession. And because you may get a lot of this, if people's spending was slow through the last, since COVID, the tariffs might push spending to no more holidays, no more upgrades of car, no more new clothes. Education gets trimmed where it can, and people just really, buckle down. I mean, I think that's what you're going to see. I can't see how prices are going to drop.
Potentially, like there might be a little bit of increased defense spending with China's moves around Australia, and again, like this is more of a defensive side. I know that the people get very divisive about politics, but I think realistically, if you look from a geopolitical perspective, that there's more than just America on the map. There's more than just Australia on the map.
Oh. Well, it's a macro effect. I mean, what a lot of people don't understand. I mean, I spent a third of my life in America. What they're realizing now is that and that heavy-handed, short-sighted views. I think it's great that he got in.
Yeah.
But I think the reality is that they're starting to realize. I mean, there's many items that cannot be manufactured in the United States that are built in China and India, and the time to get the infrastructure into the US, well, that's just ridiculous. It's 5 times the cost. And so I think they're starting to realise that now, and you can see why Trudeau come out and with Canada and was so irate about that. But I think when things settle down, where there's going to be some exemptions, because right now I can say for certain that it's unequivocal that spending will reduce. Now, what is that? Now, if spending, consumption reduces, GDP is affected, currency supply chains. So, I mean, who would have thought? I mean, they made more noise about bourbon and alcohol coming out of Canada, which was I found fascinating, and the concern they've got with that, and the Harley Davidson motorcycle. So, I think the big concern is, I think just when we've got the inflationary cost, the cost of living somewhat easing, the tariffs now may exacerbate that, or they'll agitate that.
I'd imagine some people, just from a colloquial standpoint, that most people would probably want to see tariffs dropped off US alcohol. Like in Australia, you can buy a litre of Jack Daniels for like $80 or $90, whereas you can buy it for $8 or $9 in the US.
Yeah.
Mind you, I don't know. Like there's all sorts of other social reasons why they do that. So I think, look, it's a can of worms that we could definitely go on for endlessly, but it's really good to get your insights. I really appreciate that.
No
I
problem.
guess onto a few more lighter topics. Now, you've got a bit of a YouTube channel going. Do you want to tell us a little bit about that?
Well, I got I won't say I got coerced into that, but I got after the book launch and prior to the CEO Awards, a few people approached me about certain topics. I think it was more getting an insight of actually the knock-on effect. I think the pre-election of the US election was through facilitated a lot of that. We had a very had a bit of work with Channel 9 on our view. I think why we get a bit of attention is probably because we're a bit of a contrarian. You know, we're managing a lot of capital. We take a lot less risks than, I mean, we don't expect to be getting 25, 35%, but you'll never lose capital in our business.
Yes.
So you get more of it.
Yeah.
You know, they give you more money because they go, well, we'll play with 5 and 10%, but we'll give Huggins the 90. That's the space we're in. But we're not going to deliver, you know, double your money in 2 years, but it'll be around for another 100. So
Yes.
So the channel sort of started with, and then it's what happened is that through Channel 9, a couple of guys used to work at Channel 7, and they're all doing their own thing now, of course. Came up with a myriad of all these different topics. So if you go through the Paul Huggins show and the YouTube show, it's everything right from politics, taxation, cost of living, rates, housing. You know, so they fired all these things. I mean, if I had it known they're going to come on all these different topics, people say, "What's it about?" And I said, "Well, it's about it had to do with money and the economy."
Yes.
So I didn't. I should have probably tried to corral it a bit and keep it a bit tighter. But it's there's something in there for everyone. It's a bit like Daryl Lee, I think, a bit like a lolly shop in there at the moment.
Yeah. Well, look, if you're listening and you're watching and you want to see what that's about, I will link it in the show notes after this. So have a scroll down and you'll find it. But it was good. I was watching your one on NVIDIA, and, you know, in your book, you talk about AI. It's interesting, you know, like I guess the conception is that, you know, investment firms, you know, particularly in Australia, are a little bit more, you know, traditional, old school. And yet, you know, you're right on the edge of the tech and seeing what's going on with, you know, we had a massive price increase, then a massive price drop with the NVIDIA shares. A lot of that to do with things like DeepSeek, and which is then trained off the US model. And now all the shares are coming down. Like, it's a little bit of a comical story. And I think to get some level-headedness about it is a very good reminder that, well, businesses get overvalued, they get undervalued. Zoom out a bit and just think about a big picture.
Well, just on that topic, well, I got you there is that, you know, I was speaking with John Houston today earlier, and on a topic on this, obviously they're supporting Dutton for the election, and look, with the AI, when you have a look at Microsoft and NVIDIA, the revenues that have to be generated to make a profit in this space with AI and GPT are around about 600 billion.
Yeah.
That's what you need in revenue before you get a recovery, or before you make a profit. Now, here's the thing. All of that technology are people going to pay for it? And likely most won't. And then how long before they can implement that technology?
Yeah.
So it's a bit like having the Encyclopedia Britannica. We were very fortunate as kids to have the leather-bound Encyclopedia Britannica, and for the first year it just gathered dust until I started to become an avid reader and read through everything. But it's like having that dumped on your desk. Today I can only use probably the first edition to start. I can't digest all that information. And it's a bit like when the TVs came out, the 80-inch TV or 40-inch TV or 50-inch, they were $40,000 when they were new, you know, 30 years ago. No one bought it. I couldn't afford one. Now you can buy that same TV for $3,000. So it's the affordability. The experts say that you use no more than 4.6% of the Apple iPhone. That's if you've got an iPhone.
Yeah.
Now, I just find that fascinating. So with this AI, is it who's going to pay for it, the recovery, and how much does it change our lives? Does it help us write a better letter? I mean, I'm a pretty good writer, and I've looked at the AI, and it's probably no better. But for people that can't write, it will help them.
Yeah.
Will it do better research on a particular topic that I know nothing about? Fantastic. But how much will it add? How much will it add in value in monetary? How can it be measured? If you can't measure it, you can't change it. So this is what they're doing with AI. Everyone's getting carried away. It'll help you. It's going to help you partially, but it's not going to be revolutionary now. It'll be revolutionary over 1, 3, 5, 20 years.
Yeah. I was listening to
point.
Yeah, sorry. I was listening to a podcast from Acquired. These are some investment bankers, and they put together some really detailed things. They had about a 4-hour episode just on NVIDIA. And one of the things that they were saying is they were selling at wholesale. They built this chip, and it would cost them like $100,000 to make. And so they charged $35,000 a month for a wholesale enterprise customer to go and rent that chip, and so they make their money back in 3 months. But the R&D on that is astronomical, and that's where you're to your point, where they need $600 to $900 billion to break even. And then, sorry, go on. Yeah.
This company you're saying, so someone manufactured, you say, and
NVIDIA.
And NVIDIA. Okay, yeah, right. And then that's right. Yeah, sorry, yeah.
Yeah, and whilst there's a lot of dollars in the actual product itself, it's that R&D to go do the next thing. And to your point, I think like the improvements that you'll see is like 3 to 5% on sort of a lot of little things that will add up over time. But I was looking at something yesterday. It makes security cameras footage crisper because AI scales it up, or it can read the number plate on the car that's driving away, and little things like that will indirectly lead to a lot more revenue, catching the crook, finding the person who crashed into that thing, but not necessarily like all of like I've sat next to someone who tried to will AI to do something like it was just going to read his mind and then write the thing that he wanted it to write. So until the human learns how to use the AI, it's totally useless.
Well, it's like saying to someone, predict your next thought.
Yeah. Tell me what I'm going to say next.
And so someone said it to me, I said, I never forget, I learned this of Joe Fatale. Try and predict your next thought. You can't.
No.
And so that's the point. So I'm all for this AI. You're talking to a guy that I spent tens of millions on my black box and Conquer. I mean, I've spent a lot of money to be able to forecast, but it won't predict a meteor hitting the Earth.
Yeah.
But it gives me a very good understanding where interest rates are going in the next 18 months. It's got me a very good understanding what the stock market's going to do in the US and the Australian stock market. It's given me a great understanding of the commercial market and where the opportunities are. But it's not going to predict the next pandemic, but it will give me an idea if we get another pandemic, what the outcome of the stock market will do. So I've spent money, but it's calibrated to economics. I think the AI is, it's all this euphoria, it's not going to wake up one day and we're going to be living in the field of dreams.
No, it's all hype. And it has to interact with the environment around it, as do we with our own thoughts. Well, I think this has been an absolutely amazing conversation so far. I really appreciate it. I think I want to end on something a little bit more fun. Now, you have a car collection. You're a big collector of, luxury cars. And you've got, how many have you got now? Like a couple 50, a couple 100?
Oh no! Look, it was over 100, and it's tweaked. I've trimmed that right back now. I mean, so it's sub 100, and it'll be a lot less. The whole idea now, I mean, I went this exponential growth, and over the next year or two, the idea is it's going to be. I'm rationalising and growing up now at 57, so it'll be. In 2 years' time, I'm hoping it'll be about 25 to 30, but they'll be the best of that particular model in the world.
Yeah.
And there was a lot of cars a lot of deceased estates that I'd bought up on. They gave me first crack at them, so I had an obligation. They were all overseas, and I bought them. But there's some of the cars there that you get collections of 4 or 5 cars, and there's always one or two that you don't really count on taking. but that's the agreement. It's a one line. So yeah, where it goes, there'll be, it's fair to say the next 2 or 3 years it'll be, but they're all classic cars and mainly Benzes and Porsches. They're not anything else other than Benz and Porsche.
So I know it's kind of like choosing your favorite child, but if you had to pick one as your favorite, which one would it be?
Oh, I think that and it's not the fastest, by the way. I mean Lamborghini and McLarens. The best car that gives me the most joy now is a 1971 Mercedes-Benz 3.5 litre Cabriolet. So it's similar to the one out of The Hangover. Yeah, the movie. Yeah, with the lion. Yeah, that car, mine's a 3.5, a much later model than that one in the show, but a similar look.
Yeah.
That gives me them, and it's 0 to 100 in 8 seconds, not 3. But that's just the most comfortable car and most majestic for me. It is. And yet, and when I was 25, it was more like a Lamborghini Countach. Not now. I look at Lamborghini as an ugly looking car.
Well, they say beauty is in the eye of the beholder. So if it's your car and you love it, that is more than okay. What I might even do is I'll put a picture of that car so then others can see it. But nonetheless, it's been absolutely fantastic having you today. Thank you so much for coming on to the podcast.
No problem at all. Pleasure. Good to see you.
So thank you for watching. If you want to read more about Paul, you can check out his book, Intelligent Leverage, and a link will be in the description in the show notes. Otherwise, thank you for watching, and we look forward to seeing you next time. If you've got any other comments, questions, please let us know in the comments below. And as always, please give us a like and a subscribe. Catch you next time.